All right. In today's video, I keep on bringing about how important investing is and why I feel investing should be part of, especially every young individual that watch this video right now. Why it should be part of your life for the long term. And obviously, unfortunately, we weren't taught that in school. We weren't really trained or even mentioned how to invest for your futures. So, one of the most basic and simple ways to keep your money invested for the long term and gives you the most diversification and very simple process is investing in index funds. All right, and in no way, shape, or form am I telling you where to invest, right? I'm not a financial advisor. I'm not a tax expert. So you want to sit down with your experts and find out what best suits your individual needs. But one of the things I really want to bring on this video is how investing could be simple. Unfortunately, from what I've remember growing up, I always looked at investing as this like weird world, like it wasn't meant for the common individuals like myself and anyone, including yourself if you're watching this video, that is basically consider themselves an average individual, and they you might not have the might have the knowledge to start investing your money and start basically putting your money at risk, and learning about companies and finding out what the market's doing and understanding the interest rates and what the government is doing and all these terminologies that we might not be very comfortable with, right? And it kind of is one of the barriers, I think, especially for the communities that I grew up in, working class, minority community, that they feel that it's only for the wealthy, right? Investing is only for the wealthy. And I was under that assumption as well growing up, even late until I was in college. I still didn't understand it. Although I loved it and I studied it, I really didn't think that it was for individuals like myself that didn't have no wealth and what didn't come from wealth, right? Came from a low income working class family, and always felt that this was a great, I would say a great dream to start investing, right? I didn't feel like it was possible, especially that I was coming from basically no type of education and no type of income that I had, to no inheritance, no trust funds to kind of play with. So all my money that I was making was my working money, right? My hard working money. And I don't know if I was comfortable or I didn't even know I had knowledge into investing. So here comes this vehicle that I just found out about recently. I was in the last year, the whole like pandemic that we have going on. But one of these things that that was really cool was that as I spoke to my other videos about different ways to invest, there's a lot of ways to go about investing, right? And whatever floats your boat, great. I'm not here to tell you what to invest in. One of the things that I learned was that there's not only one way of investing, right? There's a lot of different. If you look at those different worlds out there, there's different people doing different things. You can buy, obviously, the common ways, obviously, that we know about is you can buy real estate, you can invest in stocks, individual stocks, you can invest in, obviously right now it's cryptocurrency, NFTs. You have all these things that you can invest in, right? You buy something and obviously it's going to go up in value. But one of the most, I think for me, simple ways of investing and guaranteeing yourself that you're going to have your fair share of market returns was invented by a company, individual called John Bogle, I guess that's his name. If I'm mispronouncing it, let me know. John C. Bogle, and this is the book right here, the little book of common sense investing, right? And I think this powerful one book really changed my mindset as far as, and hopefully helps you as well in your future of investing, because if you make in life, as we know, anything that's complicated, we kind of just don't engage, and we kind of just like don't want to deal with it, right? Anything that's complicated, we don't want to deal with it. We'll pass it on. We won't even try to face it. We'll procrastinate, and that includes myself as well. But when you keep it simple, and the way he puts it and the way he understands it, you are more than willing, capable of investing. There should be no excuse for why you're not investing, right? There's no, I think there's no barriers like there were before, right? Before we had lack of education, lack of access to education. We have you watching me here on YouTube. You have access to the internet. You can do your research. You can Google. You have all these powerful sources in your hands. And I think the fact that you're not taking advantage of investing is not going to be left to others. It might be on you. Most likely, it's going to be on you. You have to kind of educate yourself and keep on looking for. Or at least trying to receive and being open-minded for information that's going to give you guidance and help you in the long run. And when it comes to investing, like no other, there's a lot of advice out there. There's a lot of different instruments, a lot of different vehicles. But I'm going to go ahead and just break it down to you. But the most simplest way he talks about and what he states basically, and he created the simple this is when their mutual funds were coming out. Mutual funds were basically one of the big raves in those days. He created the index fund. Now, the index fund is a fund, and basically you can look at it as a bag, right? A bag of different companies, and they're all, you have ownership in all these companies, and basically whatever the returns are on the average of those companies, you're going to be making that in your investment returns, right? And the good thing about that is that you're more diversified, because if one company does bad, another company does good, like I said in one of the videos, you're going to kind of offset that, and you won't be, I'd say, losing as much as opposed to having all of your monies in one company. Again, everybody has their own ways of investing, but I feel that if you're kind of in the like at the edge, and you don't know if you want to fully invest, and you don't understand it, and you feel like you're kind of, in a way, like it's just a little bit more like iffy about the situation, index fund is the best way to go, because very simple, right? Your money's invested into multiple companies, and the most likely index funds are the ones that are going to be. The typical one is going to be the one that's going to be investing, or basically not investing, but basically investing in the top 500 companies, and they call it the S&P 500. And those of you that might not know this, might be watching my video, S&P 500 is basically the top 500 companies that they deem as in the economy right now. And obviously a group and board of financiers get together and they find out the top 500 companies that are as far as revenue and how big the companies are. The biggest 500 companies are in the market, and they're the ones that are kind of carrying, in a sense, the production of the stock market. So no matter what, if one of those companies falls off, they're replaced by another one. So it's just the top 500 companies performance wise. And you can kind of relate this to, like, let's say you have, and I heard this from another channel, you have a basketball team and there's 5 guys, right? And they're the top 5 players in the NBA, and one of them kind of gets hurt, then you have a bench, right? And hopefully you have the top 5 players in the bench as well, and they're going to come in, and one of those guys is going to come in and replace that guy that got injured, or lady. But the team is still going to be, playing. They're going to be competitive. They're not going to be dismantled if one individual gets hurt, because the person coming from the bench might not be as good. So basically look at it like an like an all-star team comes in. Everybody that's coming in to replace the one that's playing is an all-star potential. So that's basically what a S&P 500 is. The top 500 companies and their performance, and you're getting your returns from the market. Now, I know it sounds complicated. I know you're going to be like, what are you talking about, Anthony? This makes no sense to me. Well, this is a simple way to start investing, because according to Jack Bogle, he gives if you're just starting investing and you're kind of in the undecisive, pick up this book, the little book of Common Sense Investing. I gave him other 2 books in other videos. This book, I would have to say, one of the top 3 books first to get started. I heard it from another influencer as well. But the book itself just breaks down like how at the end of the day the market is the market, right? And it's gonna give you returns regardless, and it's gonna have its ups and downs. But if you have time, and I say if anybody that's young is watching me, if you have time in your hands, and most young people that are watching me are gonna have time, you're gonna have 10, 20 years out that you can let your money grow. In the long run, your returns are gonna be better off as opposed to you trying to beat the market. So the whole basic of the book is that there's many individuals out there that are going to be, especially now, watching all this internet, especially now while I've been home with the whole pandemic. There's a lot of individuals out there claiming that they're going to be beating the market. They're claiming these exuberant returns. Obviously, we know that this year the market has been a little bit, not a little bit, totally off what it normally does, and has broke record highs and has basically taking away all that common sense investing and all that stuff because it's done so good. Now he states that it has years that the market's going to be doing. There's been years that the markets have done extremely well and been followed by an extremely bad year. So it's very unpredictable. No one can kind of tell you what the market's going to do. I don't know. Nobody knows. Not even the top experts out there know. The market does what it does. Like if you think about it, the economy was supposed to be bad now because of the whole pandemic, and a lot of people lost their jobs, and you figured the market would just take a tumble, and it did the opposite, right? So the economy and the market, as we know, are not the same. The economy went down, and the market went up by a lot. So if we relate that to like what's going on, it's kind of not relative to what situations are around us. People losing their jobs, businesses closing, economy not really working, people not really going out doing their excessive consumption, and the market still rallied, and it still and it's still having phenomenal years. So we know we got to dissociate from those things. So going back to it, if you're want to know what the wealthy individuals do for long-term investing and where most of the wealth is built, and he states it in the book as well, basically understanding where we want to build wealth for the future, it's all about being time in the market, right? He talks about it's about time in the market and not timing the market. So you want to start investing as soon as possible, or as soon as you can, and it doesn't matter if the market just had the highest numbers they've had ever. He basically states that in the long term, the market is it's gonna relatively give you returns. Average, the importance of simple common sense investing. That's basically what he talks about here. Simple common sense investing might be a route for a lot of us that are not financial experts, not into picking stocks, not into reading financial reports, not into guessing what companies are going to be good, what are not going to be good, which ones might be worth the investment. So if you're a simple investor and you're wondering where to invest and how to invest, there's a lot of articles out there too you can read, a lot of books. Pick up this book if you want. There's so many things you can read and so many advice you get from some financial experts in the fields. How, for the most part, common sense long-term investing into the common sense investing, they call that index funds, you're going to be relatively not basically, there's no guarantees, but for the most part, guarantee that you're going to get a market return. Whatever the market returns are average, you're going to get that as an average on a yearly basis. And we all know that compound interest is, as we talked about in the videos, compound interest is what's going to be building our wealth for us in the long term. It's not going to be buying the hottest stock and hopefully you're able to, if anything, 10 times sell it forward for a 10x profit. It happens. Some people can do that, but for the most part, it's not gonna happen to many of us. We're gonna be um, that's kind of the exception. But if you want to get in long-term investing, one of the simplest way to start, one of the simplest way that a lot of the, again, you got Warren Buffett, you got other Charlie Munger, all these other billionaires that are giving us this type of personal advice. Like if they were to start young right now, they had to start investing. Um, Investing in simple index funds, because index funds not only or they're gonna basically mirror what the S&P 500 is doing. They're gonna be the most cost efficient. So one of the also takeaways too from the book as well is that, as I said in my last video about Money Master the Game, he says investing sometimes is not, you can't determine just based alone on what the returns are on these companies and all these funds, right? So if in the past we looked at mutual funds, right? We talked about mutual funds in my last video. Mutual funds are basically the same thing, but they're actively managed, right? Index funds are passively managed, meaning that they don't have an active manager. Some of them are, but most of them, they don't have active manager. They're picking and changing and trading stocks on a daily basis. They're just mirroring the top 500 companies, and basically most of them are just run by obviously a computer. So their expenses are a lot lower, and they have shown to be numbers have shown that they're still yet to be beaten by actively managed accounts, which are mutual funds. A lot of mutual funds out there. So he says the difference between an index fund and mutual fund is the cost, right? The cost that you're paying, right? Also, tax efficiency. A lot of the taxes that you have to deal with on mutual funds might be more tax efficient to have an index fund. So it all depends. Obviously, in the tax situation, we don't know because I'm not a tax expert. But the index fund has the benefits are that it's the benefits of a tax. The benefits of index fund are that they're tax efficient, they are low on cost, and they kind of, in a way, for the most part, guarantee you a return of the whole stock market in the long run. So if the average market, the last 20, 30 years, the average S&P 500 has averaged 13, 12%, 12, 13%, and an average, that's what you're going to be guaranteed on a yearly basis for the most part. But we want to understand too, as well, he says in the book, past results do not equal future performance, right? And past performance does not equal future results. So basically, we can look at past, it's great, but we got to go based upon what the average is. But doesn't mean that you're gonna expect that for the most part moving forward. So he gives an estimate, like you want to give yourself like a 7 to 8% estimate average that you're going to be getting for the future, for the next 10, 20 years of the S&P 500. It doesn't seem like a lot, right? I know a lot of people are going to be like, well, that's nothing for me, Anthony. I can get 20%, I get 25% in crypto, and that's fine. Whatever works for you. But just understand this, that whatever you're doing, I hope you're investing. I really don't care what you're doing and what you invest in. But the reason I want to make the video is that investing is not that hard. It's not something that it's like you have to go to school for. You have to be like this financial expert. It's about having the means. One, it's about having the, as we said, consistency and being diligent, and also a little bit of education. Read a book or two, and really try to keep your costs low, while being as efficient as possible in your investing. As long as you keep your costs low, in the long run, you're going to be able to keep more of your returns. And that goes for a lot of stuff, right? A lot of the things that we see right now, a lot of it, the returns are really phenomenal. And there's a little bit, in a way, it's great, but it's also a little bit misinformed, because you can jump at certain profits or certain returns and think that you're making a great investment. Meanwhile, you might lose all your returns in the next month or so. So whatever it is that works for you, that's great. But I just really want to give a really breakdown today. If you're simple, you want to if you want to start investing simply, you don't want to investigate, you don't want to learn, you don't want to do anything, you don't want to really educate yourself or even start picking companies, the index funds might be your route. It might be the formula for you. You're gonna be low cost, diversified, tax efficient, and for the most part, one of the most passive forms of investing, because you don't have to be worried about what your company's gonna do, what's not gonna do, who's coming up, who's not. The index fund itself just picks the 500 companies, top 500 companies, and if one company goes, let's say, goes bankrupt, it replaces it with another company. So it's never like there's nothing you really have to really worry about as far as you having to do a lot of things. You're just there to invest your money into this fund and invest as much as you can on a monthly or yearly basis, whatever works for you, and just give it time, let it grow for as much as you can, and always in a sense guarantee your wealth in the future. We know that most of the wealth is built through investing, majority of it. Unless you're a trust fund baby, then you might not even watch this video. But if you're like me, coming from a community where we had low income families, not much education, working class, we all know hard work alone won't get you to wealth. It will help you, but it won't get you to wealth. So we have to, in a way, start to learn about investing and really teach ourselves one, and also start practicing, start being part of the investment game, start investing your money, but being educated about it, understanding what you're getting yourself into, and knowing all the implications, right? There's a lot of things that goes investing as well. It's not just buying and selling. You got a lot of stuff that comes with it as well. But understand that anybody can do it. Anybody can do it. It's just simply having the motivation and the dedication. So if you're not willing to do research, if you don't want to understand what the stock market is, bonds, all the terms, index funds might be your way. And I hope that as a person that wants to see others succeed, I hope that you do your education and study this and find out why we say common sense of investing is an index fund, because in the long run it just makes sense. And I hope I see you in the next video. Peace.